Yo, what's up, everyone? My name is Andrew Warren, and today we're going to be talking about this recent drop that we've had in the stock market. So, as you can see, this is my portfolio. The past week, I am down $5,500. I'm down 8.27%. And a lot of that is coming from VOO, a decrease in VOO stock, and then a decrease in Apple as well. Although Apple was surprisingly positive today, if you check out the past week, it's down 10.11%. And as you can see, I'm barely up. I was up 11 to 12% just a week ago, and now I'm just up 1.41%. So I'm only up $169 out of the 12,000 that I have invested here. So if we're thinking about this long term now, a lot of people would look at this as a sell, and I definitely look at things this way as well. However, I do wonder if Apple is still a little bit overvalued, even given the sale. So that's one of the reasons sort of why I'm suspicious as to whether I should invest more in Apple, because I do think there's a lot of other stocks out there that are on sale and are also undervalued. For example, I think Microsoft is pretty undervalued right now. If you even look at Robinhood, 91% buy, 9% hold, and 0% say sell. And also for the research report, I actually love this little section of Robinhood right here, the research report. You can see it on some stocks, not all of them, but it comes from Morningstar, and it gives like a fair value, the economic moat, uncertainty, and then stewardship. So as you can see, a fair value from Morningstar, they say, would be $185. And if you look at the market price over here, which is $166, you can see that at least according to this, it is undervalued right now. And the crazy thing about that is most of the stocks that I even own right now say that they are overvalued. For example, let's go over here to Apple. If you look at Apple on the research report, the cost of Apple right now is $290, but if you look at the research report for that, it says a fair value is $240. So that goes back to what I was talking about earlier, where I was saying I'm not really sure if this is a great price right now, even though it is on sale. According to this, it is a little bit overvalued, as you can see, because it's $290 market price, but a fair value, according to Morningstar, is $240. Now, of course, Morningstar statistic isn't the definite statistic on what a fair value is. However, it is useful to use when you're thinking about whether you should purchase something and whether it is too highly priced right now or if it is priced in. So if we go back to Microsoft, for example, if you look at Tesla, according to Morningstar, this is just to give you guys some perspective. It says a fair value is $471, and that is actually raised. It was like $200 to $300 just a few weeks ago. So they did raise that, but I'm not really sure about how accurate this fair value is. At least in my opinion, I do think Tesla is worth the price that it's at right now, but that is all based on speculation towards the ambition that they have for the future. So a lot of this price is already priced in based on what it will be worth towards the future. But we're not really talking about Tesla today. We're just talking about everything in general. But I do think right now is a great time to purchase stocks, and especially if you wait a little bit longer. Now, of course, waiting a little bit longer could also lead to the stock market finally rising again, and then you missed your chance to purchase on a sale. However, with the coronavirus and everything else out there, it's looking not so great for the stock market. And I'm not the type of person that gets nervous when the stock market drops. Like if you look at my past month, or my past week, I'm down 5,500, but I'm not really stressing, to be honest with you guys. I have a high risk tolerance, and that is just for the fact that I realize throughout history, the market will dip, but it will always return and keeps going higher after that. So if you can just realize the simple fact that the market will always keep going up, at least I hope so, and you're a long-term investor, which is another key point right here. If you're a short-term investor, then there's definite reason to be worried right there. I don't personally invest short-term. I'm a long-term type of person. With long-term, you don't really worry about the short-term drops like this, and that's one of the great things about investing long-term, because you know it will always correct itself. But if you're investing short-term, or if you invested money that you need in, let's say, just a short amount of time, then you do have a little bit reason to be worried about this, because this is money that may not recover for a month or two, or even, say a year. So, like I said, I'm a long-term investor, so this really doesn't bother me whatsoever. And being a long-term investor and having this mindset gives me a higher risk tolerance to where I can go for these things that will give me great profit long-term, and the short-term drops won't bother me. For example, that's like with Tesla. I said we're not going to talk about Tesla, but this is a good example. A lot of people really stress over these high drops, and if you look at the past 5 years, we'll look at this instead. For example, February 4th, it went up to 887, then it dropped again. Then it went back up to on February 19th to 917, then it dropped once again. Now, for a short-term investor, I can definitely see why someone would stress out about this, but as a long-term investor of Tesla, and for example, let's look at this. I paid almost the peak price for Tesla shares, and as you can see, I paid $926, and I own 6 shares in that. And right here it says I'm down 17%, or I'm down $950. However, that really doesn't worry me because I'm investing in Tesla long term. My goal is not to make short-term profits on Tesla. I think Tesla is going to become great long term. So these small drops and small losses don't really bother me because I have a lot of faith in Tesla long term, and I do have a higher risk tolerance. So something like this doesn't really bother me, but I can certainly see why it would bother somebody who needed that extra $1,000 in the upcoming future pretty soon. But moving back onto the main topic, this is why I think it's one of the greatest times to purchase stocks. You could either say right now, or you could try to time the market, which I don't recommend. I think timing the market could end up hurting you more than helping you. And for example, I decided to take advantage of this sale myself today, and I actually bought some Microsoft. So around this period of time right here, 10 o'clock, you could see it slowly going up more and more and more. And I can't remember the exact time that I purchased it, but I finally realized today that Microsoft was starting to increase a bit. So I thought, okay, before it starts going up a lot, I'm going to go ahead and purchase these shares on sale. So as you can see right here, 13 hours ago, I did a limit buy for 12 shares at $170.50, and that was a total of $2,046. And then as it started increasing even more, I thought maybe I was going to miss out on this sale, so I decided to buy another 6 shares for $171.59. But as you can see, it actually at the end of the day, it ended up going lower than that. So tomorrow, I may end up buying even more Microsoft. I'm not really sure yet, but I'm definitely taking advantage of this sale right now. And even though I bought and lost a little bit money today, like I said, I invest long term, so this doesn't really stress me out. And you have to go back to the statement of how timing the market can hurt you more than it can help you. So for example, say if we waited, and we can never really predict the market. So say if we waited and instead of purchasing right here, we decide to wait and say, okay, maybe there will be a drop like this later on, maybe tomorrow or the next day. But instead, the stock increases back up to 180 within the next 2 days, and then we missed out on the sale right there. So you do have to consider, if you're trying to time the market, you may end up missing out on more profits than what you will lose if you don't try to time the market. So I really think it's a great time to get into the market right now, especially if you're a new investor. If you're a new investor, though, you do have to realize the risk tolerance that you have, though. So in my honest opinion, I believe that this is a great time to get into the market, especially if you're someone that has never invested before. Although that may sound crazy to you, if you're getting into the market right now, you're actually getting all of these stocks at a fair price and on sale. Whereas if you got into the market, let's say 2 weeks ago, you would be paying the highest prices ever for these stocks, when in reality it would drop down in just another 2 weeks after that. So this is really one of the greatest times to get into the market, in my opinion, when you do have a drop like this, a significant drop. Like for example, this is down 11%. This just means you just got a stock 11% off. And in my honest opinion, I think Microsoft is a fantastic long-term stock. For example, even with that 11% drop, just look at this. 50% in the past year, and in the past 5 years, 281% growth. That's absolutely insane. And on top of this absolutely crazy growth, you also get a 51-cent dividend every quarter per share, which equals $2.04 per year. Now, this will not always be the same, but as you can see over time, the dividend just increases and increases and increases as the share price gets larger. So it's a 1.19% dividend yield, and you get $2 per share that you own. So for example, if we buy this share right here for $166, we'll get $2 per share every single year. So for example, today, now I own 38 shares of Microsoft. If we just want to do a little bit of math, we do 38 times 2, and $76. I should have known that already, but I'm just showing a visual representation. We'll get $76 per year just off of me owning 38 shares of Microsoft. And if you really think about that, it is small income, but that is on top of this absolutely crazy growth that you'll get for each share as well. So not only will you get that $2 per share in dividends, but you'll also get some really high rates of growth. Hopefully, for example, you can see this within the past year, 50% growth. That's $55 off of one purchase of a share, which is crazy. So I think Microsoft is a fantastic dividend stock and a fantastic growth stock. I'm honestly pretty surprised that they're giving out dividends, but I absolutely love it. I think it's one of the best stocks that's on sale right now. But anyways, that's just my personal opinion. This is not to be considered financial advice. All of this is my personal opinion, but I do believe for the people out there that are not into investing yet but are thinking about it, this is a great time to get into the market. If you just look at this, this is actually a good sign for people that want to buy. Although it does hurt my portfolio and it doesn't look great on the screen, all this means is that you're going to get stocks on sale, and if you hold long term, it's nothing to be worried about, at least in my opinion. Anyways, I hope you guys enjoyed this video, and please be sure to let me know what you guys thought about it. Also, make sure to drop a like if you enjoyed it as well. That would really help out with this channel. I am starting new here, but I do plan on grinding a ton of videos in the future. As you guys can see, I have a pretty large amount of money invested, and this is just something that I'm passionate about. I enjoy talking about stocks and financial things. So I hope you guys enjoyed. Thank you for watching.